since last week. We note the potential for slight volatility in the gold market, as market participants may be urgently awaiting the core PCE rates from the US, which is the Fed's favorite tool for measuring inflationary pressures. In this report, we aim to shed light on the catalyst driving gold's price and assess its future outlook. The US government, for a second time in a year, is facing a looming deadline upon which the US government could potentially shut down. The potential government shutdown has the potential to greatly affect the US economy, as it may entail many potential government employees being furloughed. Furthermore, the possibility of an agreement being reached seems to be edging further and further away, as potential proposals have been met with staunch opposition from hardline Republicans who appear to be unwilling to budge the requests of Republican House Speaker McCarthy. In the event of a government shutdown, which may be as soon as on October 1st, we may see the greenback weakening against its counterparts as the political situation in the US continues to be polarized. As such, investors may seek for alternatives such as the precious metal, which is considered to be a hedge during times of instability and as such may receive safe haven inflows. Therefore, we may see an increase in support for the pressures in the event that a government shutdown is not avoided and is prolonged past the deadline of October 1st. However, should a deal be reached, we may see the greenback gaining some support and the bullion moving to lower ground, in the event that the potential crisis is averted. In conclusion, we may see an increase in support for the pressures in the days leading up to the shutdown date, where if no deal is reached, we may see further support for the precious, while should a deal be brokered, we may see a weakening in the precious metal. According to a report by the Financial Times, China's central bank lifted temporary curbs on gold imports that were imposed on some lenders in a bid to defend the renminbi. The decision by the Chinese central bank last week may have eased pressures on the precious metals price, as the removal of the quota may facilitate an increase in imports of the precious metal in China, potentially weakening the price of gold, as China is a predominant importer of the precious metal, as seen by data from gold.org, in which China's central bank has been steadily increasing their gold reserves. In conclusion, despite the removal of import quotas on the precious metal, we personally anticipate that in order to boost the demand of the CNY, we may see a reinstatement of the curbs on the imports of gold in the future, as such potentially increasing the price of the precious metal, at least domestically in China, but given the sheer size of the Chinese economy, it may impact the international markets as well. Thank you for watching.